everyone, welcome back to another trade. I finally found a good opportunity. I entered with margin of safety, and yeah, I will try to take a couple of trades for today. The movements of the candle in today's session is kind of bad. You can see that it's kind of weird, but I took my trade on this setup. It's closing exactly on the support area. I'm expecting a rejection and a green candle. Let's see. Yes. Oh my god, that was so close. See, the movement of the candles are pretty crazy. This is the sign of bad market, and this is the sign of the market that should be avoided to take your trades on. It could simply make me lose this trade if I was taking this trade without margin of safety. I'm going to take a 250 on this one again with margin of safety. We have a little bit of gap down. That's why I took this, and that's the reason why I took it with a small amount. Taking the trade with a small amount is only because if we have an unsure opportunity like this one. If we see 3 consecutive green candle and this is a bad market, we never want to go against it. Okay, that's why I go with 250 and this gap down. All right, it seems it's going to be a winning trade. In these type of markets, you have to be very, very flexible when it comes to trading. And if you, for example, if I was taking my trade exactly here, I would lose this trade for sure. And all of our trades should be with margin of safety. I will tell you what margin of safety is. In order to take margin of safety trades, first thing you need to know is put this on 0, third part of your timer, and this should be on +1, and this should be on auto time offset. Okay, this will help your trades to close exactly when the candle is closing. This is actually a timer. And once you have a market with big rejections, and let's say you want to sell right here, okay, you enter when the candle moved enough in the opposite direction, and then you take the trade, okay, instead of just entering immediately. I will show you in my next trade. If we get a very good opportunity. Today's market doesn't look very good. Let me just see this. No, we don't have ingolf for this QM. This is a QM pattern, but we don't have ingolf for this in higher time frame. That's why I'm ignoring this one. I'm gonna move to the next pair. We have to just, when it comes to trading, you just need to just keep moving. Let me just take this with 500. Oh, it's already moved. It's already moved. I was taking this 500 because we are in a red-green pattern. I'm sorry, we are in a ranging market and we are in red-green pattern. That's the, and also we have a little gap down. So I will wait for this to come down again a little bit, and then I enter with margin of safety. Because if you look at this chart, we see pretty much on every single candle, we see a little bit of shadows. So I can expect we can have another shadows on this one. It already have some, but I can draw a common point of rejection. Let me see. And take my entry here would be very nice. It would be margin of safety. It would be a gap down and ranging market and red-green pattern. This would be very good if my entry was exactly when the candle was touching here. Okay? When it comes to bad market, you have to take your trades with margin of safety. You cannot enter immediately on the candles. All right, we broke this overlapping area, but since this is bad market, I should be very careful. I'm going to go with 500 right here because we can lose any time. When the market looks bad, lower your trade amount. This is your only tool to manage your risk. Okay? In Forex, we use stop losses to manage our risk. I mean, we have something called risk to reward ratio, and that can manage our risk. When it comes to binary, this is the only tool that we can manage our risk. If your trade is unsafe or not a very good trade, you can just lose. You can just use lower amounts. All right. In a bigger picture, this is a decision point. I'll tell you why. First of all, we know that every advanced setup, like a QM, can react. Once it's broken, it creates a point of interest. It creates a decision point because there should be some strong force that broken this QM, right? So next time price comes to that zone, it will react. If I mark this, and if you gain enough experience, you will detect this in a blink of an eye. Okay, blink of an eye. All right, so this is a QM. See that? It reacted pretty well, and then it got broken, right? So beside QM, what else we have? What else do we have here? Okay, this is another resistance beside the QM. Okay, now I want to mark both of these, and I go to the lower time frame. What else do we see here? Let me just go to 1 minute again. I want to mark the overlapping area as well. Okay, overlap. This is called overlapping area. These are some, let's say, hidden dojis. Okay, we can call them hidden dojis. There's a doji between these two candles that created that overlap. Anyways, when we break it and overlap, it acts like a doji. Now, if I go to 30-second, what do we see here? Beside this overlap, this resistance, and this QM, what else do we have? We have this little demand zone. Now, I'll make it yellow, right? So, let's go back to 1 minute real quick. Now, what do you see here? Okay, what do you see here? The resistance got broken, right? We got the demand right before, and this candle is closing inside the demand. What is demand? Demand is somewhere that the buyers are camping, right? So it's closing right inside the buyers. It's breaking this doji. This is a decision point for this resistance and the decision point for this QM. Okay, so buyers would be in. So if you add up a market sequence to this, let's imagine we have, we can consider this one. If this is a doji, this is still a 2 red candle, right? So this is market sequence as well. It makes it super strong. So now imagine we also have a little gap down here as well. That'll be even stronger, right? But the question is, why did you take it with 500 instead of 1,000 on this trade? If that's just so many confluences there. It's because we are in a bad market now, okay? Simply because we are in a bad market and we should be very careful. So the second question comes up, is this still possible to lose this trade? Of course. Of course, it's possible to lose this trade. There's not a single trading setup in the world that gives you a 100% winning ratio. That's impossible. That's close to impossible, okay? If you're a good trader, you can make money with 60% winning ratio. If you're a bad trader, an unexperienced trader, let's say, we don't have a bad trader. We have high experienced traders and low experienced traders or beginners. If you're a beginner, you will lose money with a 95% winning ratio strategy. Okay? If you are an experienced trader, you will win money with a 60% winning ratio strategy. Okay? So the traders are determining if a setup is profitable or not. All right? Let's put that aside. I want to take another trade if that's possible in this market. Oh, look at this. Look at this beauty. I'm going to take it with 250. But today's trades are pretty small. 250, right? So, what do we see here? Let me see. The first thing I saw in this chart was this huge gap down. It's closing exactly on the round number. I took 250 because I don't see any other reason. Okay? If you look at the previous trade, there was a lot of confluences. But now, it's just a gap down starting from a round number. That's why I took this trade. Okay? We don't have any major reasons to take this trade. I will keep looking. All right, this is another huge gap down. And if I want to take this, I will still take 250, but I'm not taking it because I want to take a good trade. Okay? I'll show you how a good trade looks like. All right, this is simply a decision point. Let me just see. Let me see. I hope we haven't missed entry. Oh, we don't have any entry for this one. That's so sad. It reacted, but we didn't have entry for this. It reacted pretty well. Why do I call this decision point? Because we have respected support. And it's broken, boom, decision point right here. If we find lower time frame entry, we can take this. But now I didn't see any lower time frame entry, so I didn't take it. Simple. Yeah, so let me see if I can find another opportunity. That's literally how trading is. All right, we're breaking this freaking doji. Let me see. I want to take with margin of safety, if you remember. I want to take it with 1,000. Margin of safety. No, I don't want to miss this opportunity. What is the best margin of safety? Okay, if it touches the line, I will take it. Please, please, please. Oh man. No, this is emotional damage. All right. All right, we missed this opportunity. This is a perfect doji break. Like that overlapping break. This is the doji break. When we break a doji, you can take a trade. If we are in this kind of range, and if we're a bad market, you can connect the rejections, this one, or even this one, and take a common point of rejection exactly on a doji trade. So this, imagine this was coming to my line, and I would enter and it would close like this. This is margin of safety, doji break, ranging market in a bad market, right? But I don't take the margin of the common point of rejection on this trade with 1,000. If I want to take this, I would take with 250. Question is why? Because we don't have a doji break anymore. We don't have any major setup anymore. Okay, so this is just a common point of rejection for me. Now, if you take this with 1,000 and lose and complain, it means that you need more practice on your risk management. Let's see how many trades. All right, we took 5 trades. All right, let me just take a good one. I'm going to look for a very good one. Okay, I want to take this. I want to take this. No, give me the entry. Fuck. I would take this sell. Why? Because if you look, first time it's rejected from here. Second time, it didn't create a high. Third time, it didn't create a high. If it still gives me the chance, I will enter. All right, not anymore. All right. I'm glad I didn't take this. We would lose this trade. Holy shit. All right. All right, we have a third touch breakout. It's against the market. I'm going to take this. This is a third touch breakout. Shit. Against the trend. Make sure if you trade in third touch breakouts, your momentum should not be perfectly lined up candles. They should, if there's a momentum, there should be some gaps like this. It gives them imbalance and more chance for your trades to work out. Okay, when it comes to third touch breakout, if you have this kind of movement, no gaps between the candles, it means that the buyers are moving like this and there's no impulse, there's no imbalance between them. But if there's gaps, it looks like a good momentum, but there's gaps, it makes it weak. All right. Okay, we have this little doji here, but I wouldn't take this trade. Okay, this is not a good doji trade. Remember that. It's a winning trade, but it's not a good doji trade because we don't have proper range for it. Same as this one. And yeah, I think I'm going to stop right here. This market doesn't look very good. We took some small trades today. Good session. I hope you enjoyed. If you learned something, please drop a like for me. And also make sure you join the official Telegram channel using the first link in the description. Thank you for watching and peace out.